Howdy there, folks. Welcome into the buy one, get one free here today on the channel. 2 videos for me to react to and give my opinion and perspective on. First one up here, don't sell unless you're very tactical short term. This is from yesterday. Jeremy Siegel, the Wharton professor, came out and said, and I want to react to that, kind of give my 2 cents on that one. Looking forward to watching that one. This one I actually saw yesterday. I watched the entire 3-hour I guess you can say interview of Warren Buffett yesterday. He was in Tokyo, Japan. It was obviously always phenomenal to listen to him. And so we're going to react to this 4-minute clip here. Warren Buffett on the U.S. economy. It's a tougher world out there for many businesses. Hear what he has to say. I want to show you guys that clip and react to that one. I appreciate everybody joining me as always. Thanks for being subscribed, folks. 25,400 plus subscribers, if not 25,500 plus subscribers. So thanks for being here. Also, Patreon members. Moves coming in there tomorrow. So if you want to get access to see all the moves I'm making, the stocks I'm buying and selling, check us out. That's going to be a pinned comment down there. As far as new members, price goes up May 1st for anybody that doesn't join by May 1st for that. And by the way, tonight I'm posting the link to actually have a chance to win a membership in the private stock group, private wealth group every single month. We do that for the Patreon members. Somebody gets to win that in a big drawing. So if you want a chance to potentially win a free membership, make sure you join us in Patreon. I'll post that link up. And then the drawing, I believe, is in 2 days for that. Alrighty, guys, let's get into this.
Back with us, and we're so glad to have you, Professor, on this day. You said a couple of weeks ago, quote, "I can't be optimistic until the Fed, shall we say, gets it, and there's no sign they do yet." How do you feel hearing these comments that we've gotten today and what you might hear in the days ahead?
Yeah, I mean, I believe the Fed has already done too much. I voiced that for the last 6 months, that the trajectory was way too high. By the way, speaking about the core, if you actually put real shelter prices in, I mean, from Apartment List, Zillow, or the Case-Shiller number, I've done the calculation. Core has been zero inflation for the last 4 to 5 months. So it really wipes out the core if you use real shelter prices instead of the, as we know, dramatically.
Before he goes any further, because he's going to make a lot of points here, I'm sure, and I want to take these one by one. He just said that he thinks the Fed has done too much, has gone too far. They asked Warren Buffett this question yesterday, okay? And that's not going to be in the clip we're going to watch, but it was in another segment, okay? What Warren Buffett said nothing, okay? Warren Buffett avoided that question like the plague in terms of, has the Fed done too much? Should they keep raising? Anything like that, okay? So he refused, and Warren Buffett said Jerome Powell's been doing, in his opinion, a great job. A great job. And so I thought that was interesting as well, right? Now, Warren Buffett tends to be more of a positive person, so, maybe there's that. But he didn't say anything bad about Jerome Powell. He didn't say anything bad about the Fed in terms of Warren Buffett. And in a time period, it's interesting to hear that, because I can tell you everybody's been criticizing the Fed. I mean, you watch CNBC, and everybody's either has an opinion that they should have been raising faster, or they should be at a higher rate than they're at now, or they should be at a lower rate, or everybody's got an opinion. And it just seemed like Warren Buffett was just like one to just be like, no, I think Jerome Powell's doing a great job, and he should do whatever's in the best interest of America. I just thought that was interesting that everybody thinks they could run the Fed and make these decisions better than Jerome Powell, except Warren Buffett. Maybe everybody else is delusional in the world. I don't know, okay? It's interesting, but I think that's Monday morning quarterback, right? Everybody thinks they can do better than the next guy's job, I guess.
Lag prices that the Fed is using. So really, core is not a problem. They should have stopped. They shouldn't have raised last time. It looks like they're going to raise again and make an announcement of a pause. I really hope Austin Goolsbee makes a dissent, because there has not been a dissent for over a year at the Fed. Groupthink has reigned, I think, to the detriment of monetary policy and the American economy. And I would like to see another voice actually make a dissent at the meeting. So I am awaiting that.
Professor, if they raise in a few weeks' time, what happens to stocks?
Well, I think it depends. I mean, we still have, 3 weeks to go of data. I mean, I really think, again, what happened to the banking system and what I see in data on lending falling off the cliff really portends a much bigger decline in economic activity. I am shocked that no one at the Fed has actually cited the reduction in lending that has occurred almost the most in 75 years, actually. We know M2 liquidity last year fell by the most in 85 years. It's falling again this year. The squeeze on liquidity is much greater, believe it or not, on the money supply than we even saw during 2007, 2008. Now, I'm not claiming we're going to have that because that froze the entire banking system. But what we saw with SVB and the lending standards, I think the Fed should absolutely not raise. What does this mean? The probability of recession has gone up. Listen, I said for the last 2 months, I'm not really optimistic about stock prices in 2023. I hope they go up. They might.
Before he goes further here, okay? It's interesting. I heard a great perspective on this that I want to share with you guys, okay? It was actually the RH CEO on the latest conference call RH had, okay? And he said in this conference call, he's like, people, don't fear a recession. Like, recessions come and they go. Like, we're going to have recessions. Don't fear that. Fear what we had in the 1970s, when you had inflation go crazy, then come down a little bit, go crazy again, come down a little bit, go crazy again. And they kept having to raise rates again and again and again until, what was the Fed funds rate at the peak? 20% or something like that? And so there was just a great perspective I heard from the RH CEO that I was just like, I think more people should probably be in that thought process, because I can tell you, if you had to say, would you rather go through, a recession, that usually lasts, I mean, it depends on recessions. It could last, 9 months, 18 months, something like that. Or would you rather go through an entire decade of this, right? And a lot more of this than that, okay? So I think that's a fair point. Don't fear a recession. Do fear something like that happened in the 1970s. And obviously that's what the Fed's trying to avoid here. They do not want one of those situations, because I can tell you, that makes things very bad for a lot of people for a long time. And recessions, you can get over that. I mean, even in the Great Financial Crisis, like we it was really bad, and that was an extreme recession, right? That was the worst recession we pretty much had in an insanely long time. Some say since the Great Depression, right? And so that was dramatic, but at the end of the day, we made it out. Yeah, it was a slow recovery over the next few years, but we made it out, and then we had a prosperous next decade. And so, I think I like that perspective from the RH CEO.
But you were until not that long ago. You thought we were going to have a big
they'll finally get it. So we'll have a recession.
What?
Suppose. I hope they go up. They might.
You were though. You were until not that long ago. You thought we were going to have a big
they'll finally get it. So we'll have a recession. Suppose we have a recession.
What's he saying? You were. What is this about? He's saying he was bullish. What is going on here?
I said for the last 2 months, I'm not really optimistic about stock prices in 2023.
So he's not optimistic about stock prices in 2023. But then the other gentleman, Scott Wagner, he says that he was just a few months ago, right?
Go up. They might.
You were though. You were until not that long ago. You thought we were going to have a big
they'll finally get it. So we'll have a recession. Suppose we have a recession. Earnings are down 10%, 12%. You give me a number for a year and a half. Then they're going to boom again, 2024, 2025. And I think those are going to be great years. If you look over the trough, I'm still saying don't. Even though it might be rough over the next 6 months, unless you're very tactical and very short term, I mean, I'm not a seller.
That's like arguing or debating 101 right there, right? It's like when somebody's making a really good point and you're trying to avoid it, you just speak louder. Just speak louder and speak over them and act like you never heard that point they just made. Oh my gosh. That was too funny. Too funny. Good stuff there. Okay. Warren Buffett on U.S. economy. It's a tougher world out here. Let's hear what Warren Buffett has to say about the U.S. economy. Let me react to this here.
about the economy. We have heard recently from Jamie Dimon in his annual letter at JP Morgan. He says a recession is much more likely now. Janet Yellen was just speaking, I think in the last 24 hours, although it's hard to track from here when things are happening, has just said in the last 24 hours, I think, that the U.S. is in better shape now than it was 6 months ago. Which of those camps would you put yourself in? Well,
I know what a lot of different businesses are doing, and I just got a report from one of them that happens to be in the retail-related business. And in any event, it was minus 22% in February from a year ago.
In
they
sales?
didn't think that was going to happen.
Sales? You mean
in sales.
profit? Yeah.
In sales, profits are down a lot more than that. On the other hand,
You hear what he just said that he snuck in there? Profits are down a lot more than that. So who knows, for that particular business, revenue might be down 22%, profits could be down 42%, 40%, 50%, 60%. You got to understand, when you have that type of revenue deterioration, unless you can magically cut costs, and a lot of businesses can't, they lag on this, oh boy, okay, it gets ugly fast. And by the way, in yesterday's video on the main channel, I think my opinion is the businesses he was talking about was either likely RC Willey, a furniture business that Berkshire owns, or it could have been Nebraska Furniture Mart. That's my opinion. They own a lot of different retail businesses, but I think it was probably one of those two because I had a guess. Furniture sales are very bad right now with the fact that not many people are moving right now, and that's the biggest help for furniture sales. And obviously bigger ticket purchase items like that are not in an area of strength because, let's be honest, you buy a new whatever, even if you buy on the cheaper end, a new couch or something, I mean, you're still spending many, many hundreds of dollars, and if you buy something a little more high end, you're spending thousands of dollars.
some of our businesses are still doing fine, but they all are reporting that the new, some of them are living off of orders were placed months earlier and that sort of thing. But it's a tougher world out there in a great many businesses, not in the insurance business. Insurance business should be better this year than last year. That doesn't mean it will be because we can't predict everything that happens, but on a probability basis, it should be better than last year.
You heard what he just said there? That's a great Warren Buffett line, on a probability basis. Because you got to understand, everything in the money game, everything in investing, you have to put it on a probability basis. Okay? This is actually something I learned at playing poker. I took playing poker serious for about a year or so, and actually helped me learn a few things about actually the stock market by playing poker. And when you're playing poker, there's probabilities. And if you have certain cards, there's a probability you're going to win, lose, but there's always a probability you're going to lose, right? And so in the market, when you're making investment decisions, there's always a probability things aren't going to work out. You heard him just speak about his insurance business there, right? Geico, and he owns other insurance businesses as well, right? He says the probabilities are things are going to be better. Not for sure, but the probabilities are, right? And so everything's on a probability basis in life, honestly. And the more you start to view it from that lens, you realize nothing's a sure thing and everything's on a probability. I think it just helps you make risk-reward decisions maybe on a little better level.
Railroad business is down and carloads carried, but it isn't dramatic. And, of course, we've got a utility business, and that doesn't really vary much with things. But overall, I think people that run our businesses that do have any sensitivity to the economy are surprised at where they are now compared to where they thought they were going to be 6 months ago. That doesn't mean...
So basically saying, like, most of the businesses that Berkshire has, they're surprised that things are weaker than they expected just even 6 months ago.
The world is coming to an end or anything because 58 years I've been running Berkshire. I mean, we've run into all kinds of problems, but that's what business is about. And we run our business so that we don't depend on everything being big hunky-dory always. We run it so that we will be the last man standing. And that's the way, if millions of people are going to give me their money and tell me to take care of it, we're going to try and take care of it. And if we don't...
The problem with Berkshire and a lot of companies Warren Buffett owns, he owns a lot of companies that are very sensitive to the economy, okay? You want to know what companies I'm talking about? He owns a brick business. He owns a carpet business, okay? He owns, different businesses in relation to construction. Several furniture companies they own. And so when you own those sorts of companies, right, like if the economy really gets hit in a significant way, I can tell you, it's going to damage Berkshire's numbers. And so last year, I think a lot of those companies had a lot of orders still coming in. A lot of homes are still being built, construction. And obviously, that's starting to dry up in 2023. And I think that's the lag effect that a lot of his businesses are facing. Now, meanwhile, right? A lot of those businesses did just fine in 2022, but you had a lot of tech companies get hit heavily. And now you've seen a lot of tech companies reposition, cut a lot of employees, cut a lot of expenses over the last quarter or two, right? And then I think a lot of these tech companies are going to report insane profit growth in the back half of this year, regardless of what happens out there. I'm talking Amazon, I'm talking Meta. There's a lot of them that you're going to see their EPS really take off like a rocket ship in the back half of this year, 3Q, 4Q. It's going to be, in my opinion, rather shocking to a lot of folks when they see those sorts of numbers coming in 3Q, 4Q, the net income growth year over year, the earnings per share growth. But for a lot of companies Berkshire owns, there's been a lag effect. And unfortunately, I do think that's going to hit Berkshire over this next bit of time here. And like I said, it's a lag effect here with Berkshire. And so, in terms of Berkshire stock, I mean, if I had to guess, I wouldn't be surprised if Berkshire underperforms a little bit over this next 12 months, especially if there's any more weakness in the overall macroeconomic landscape here.
As much money as we might have if we'd leveraged more or done other policies, so be it.
But you think a recession is more likely now than maybe you would have said 6 months ago?
Well, I think most of our managers would say that they are surprised at where they are now compared to how they thought they were going to feel 6 months ago at this point.
And
in a lot of businesses, but not in the insurance business, but I think the people at the railroad are somewhat surprised that car loadings aren't a little higher rather than a little lower, somewhat lower, but most of the stuff we carry is...
Oh, yeah, I forgot. They own one of the biggest railroad operators in the United States of America as well, right? Another business that, obviously needs-based in terms of, there's always going to be a need for rail, but when the economy is doing really, really great, that's the cream for the business, right? And when things are a little weaker, you don't quite have as many carloads there, right?
It's essential, but it reflects what's happening. And of course, supply lines were so disrupted and everything a year or two ago that, no economic figures are pure, but I'm just telling you my impression. I look at the numbers every day. I mean, I look at our Easter sales day by day at the candy store, and I can look at California versus Washington versus Oregon, and I get them the next day. I mean, so I love figures. You can say that it doesn't really do me that good to be such a figure nut, but I just like them when I see them.
In terms of the potential for a credit crunch coming through what the banks are going through right now, there's been
famous words. I like them when I see them. Mm-hmm.
A lot of speculation about what that could mean to the economy. Is it going to mean a 0.5% hit to GDP? Is it going to mean a 1% hit to GDP? What would you guess?
I would say that I've been in business running Berkshire for 58 years, and I've never found economic forecasts of any use to the company. And all we have to do is keep running every business as well as we can, and we got to keep plenty of cash on hand so that people can keep making intelligent decisions rather than those forced upon them. And that's all we know how to do. And if I depended in my life on economic forecasts, I don't think we could make any money. I don't know how to do it. And people want to get them, so they get them, but it has no utility. When I find one of our companies has hired somebody to tell them what's going to happen in the economy, I mean, they're throwing the money away as far as I'm concerned.
Yeah, I love that. In regards to that entire 3-hour interview, I will say I felt like Buffett. I've been watching his interviews for 15 years. I felt like he was the most, how do I put it? I felt like he just avoided questions a lot more than usual. Like, even you heard the recession question there, right? He never directly said, I believe there's going to be a recession or not a recession, right? He said, well, our managers, basically it's a lot worse than they expected, 6 months ago or something like that, right? So I don't know why that was. I really don't. Maybe he was just in a certain kind of mood. Maybe he didn't want to say too much. I don't know. But I just thought that was telling. So anyways, appreciate everybody joining me as always. Thanks for being subscribed, folks. Thank you everybody that supports the channel on Patreon. If you're looking to join us in there, see the moves I'm making in the next 24 hours, that will be pinned comment down there, and also enter to try to win a free membership into the private stock group, private wealth group. That will be in the Patreon when you join in there, and have a great day.